I'd like to thank everyone for joining the inaugural Renaissance Capital Nigeria Tech/Fintech Conference. I think we start this conference by having a discussion with the regulators, or perhaps aptly put, infrastructure providers. These providers provide the regulation in which many of our tech and fintech platforms lay upon, and they also provide infrastructure for creating value via the capital markets. The speakers on here today represent a large subset of this regulatory base, and I'll start with a very quick introduction of those parties. We've got Temi, who is the CEO of the Nigerian Exchange Limited, Olufemi, Sojinrin, who is the Chief Information Officer of Nibs, and Emomotimi, Agama, Deputy Director and Head of Registration, Exchanges, Market Infrastructure and Innovation at the SEC in Nigeria. Just to set the scene here, what we're going to try and do is further understand the thoughts of our infrastructure providers / regulators, how the outlook for the ecosystem and the various initiatives many of them are putting in place. I think we've got three regulators / providers here, and what we'll try and do in the spirit of constructiveness is make sure that the focus is in their remit and not without. So starting off, perhaps I can draw on Temi, the CEO of the NGX, to talk around capital formation in Nigeria. The NGX recently demutualized, and that's seen as positive. And this is one of the reasons I have said it is an infrastructure provider as such to a regulator, because there is a different division that does that. But we'll say in Nigeria, for example, capital formation has been few and far between. There are IPOs every 3 years, and a general malaise from the investing public. This could be as a result of experiences from the past, but something that has been addressed in multiple markets that have gone through the same cycles that we have. On the other hand, we've seen the tech community bring together entrepreneurs, ideas, and capital in a very, very quick and rapid fashion, typically private, and in many cases via offshore markets. What solutions and innovations is the NGX looking to put in place to address this? Thank you.
Sam, thank you very much for the question. Let me say good morning to you and to all of the participants, also to the other panelists, and to start by commending RenCap on what is, in my view, a brilliant initiative. Thank you. You know, it's always good to see intermediaries really invest time, resource into just deepening and developing the market, particularly this sector. So thank you to you and everybody at RenCap. You ask a question that, in my view, is obviously very important, but it is within what I would call one scope of the services that we deliver, which is really listings. As you know, as a market infrastructure, we do both listings and we offer some sort of ability to trade in the secondary market. So if you'd be kind enough, I would just very quickly perhaps expand the scope of your question, and then I will come back to directly address what you ask around listings and capital formation. If you think really around what I call this exchange, as it were, and interaction with technology, and if you look at it really along the lens of, say, digitization on one hand, digitalization on the other, and digital transformation, what you would find is that the exchange today is an extremely digitized place, an extremely digitalized institution. I would say both internally and also in the way people consume our product. So for example, it's going on nearly 2 years now that there has been no physical trading on the floor of the exchange. It's all happened digitally. I think that's a remarkable testament to, you know, just all of the technology, call it interactions at the exchange. Of course, speaking now to this sort of secondary trading part of our business, there's this digital transformation that really then is the next phase post this demutualization. And I think the problem set there is relatively straightforward, which is how can we as an institution ensure that, you know, the way that last mile delivery, as it were, of our product is extremely digitized and consumes through technology. Another way to think about that is that why should it be easier for a Nigerian in Nigeria to access foreign securities than it is for them to access securities on our exchange? So all of that body of what I'll call digital transformation needs to be done. I'm glad to see the SEC represented here. They are the apex regulator, and they are taking a very active lead on this while we also work with them. So, that's that on the sort of secondary markets trading side of things, which is really to communicate that the exchange of the future is one that is actively trying to address this question. Because once you do that, then we really start to address everything that the exchange is there for, whether it's, creating wealth, helping the nation, helping corporates achieve sort of capital raising and capital formation objectives. Now, I go very quickly to our listings business. And you made some extremely important points as you spoke. There is indeed capital being formed all around, particularly within the tech ecosystem. And the question then is, how can we as an exchange sort of participate and facilitate this a lot more? And a lot of things come out and stand out very quickly. I think the first thing people need to remember and realize is that a lot of this funding within tech tends to be more early stage. As you would know from the stages of capital formation, the listing process is really sort of a more mature path when a lot of the VC and the angel investors and indeed the PE investors are done. But nonetheless, the question does need to be asked, and we are asking that as an institution, that what would it take for the exchange to get more involved with all of the work that is happening with the tech ecosystem? The reason we're asking that is partly selfish, because as an institution, we need to get involved. These are the companies of tomorrow. And to your point, is really where you're seeing the activity. To address that, I should say quickly as well, it's a subject the exchange has tried to address in the past. We do have a growth board, as I'm sure you're aware. We have a company like BrickLinks that raise capital through that growth board. But nonetheless, a lot of work needs to be done. So what are we doing? There are certain things that I can't really go into much detail on right now, but I think philosophically, the way we are approaching this is to come to a realization very quickly that the way that our rules are currently set up and the way that our boards are currently set up may not necessarily be particularly, call it, acceptable to the tech ecosystem. So you would find things, for example, everything from what I call investing philosophy, where perhaps the typical investor in Nigeria, the way they would view a tech investment will be different. They might be looking for dividends as an example, and we know that that ecosystem doesn't quite participate like that. So there's all that sort of, call it, education that needs to happen. But more importantly is if we come back to our platform and you look, for example, at the way all of the capital is being raised. These are typically in foreign currency, as an example. How do we make sure that we're friendly towards that? These are typically dual class structures also as an example. How do we make sure that we can accommodate that? How do we make sure that our rules really accommodate the fact that the landscape is changing and is evolving very rapidly? So all of this body of work, the exchange again is working both internally, externally, to ensure that there is a platform that is acceptable for all of this. The final thing I would say before I then pause is also the way we view technology going forward. Technology historically, you would find perhaps in most businesses, there's been more of, I guess, support, as it were. Technology at the exchange post-demutualization is a standalone business line. It is a business that then enables, call it, support. So you would find the exchange increasingly ask itself how it can do more through technology, perhaps to drive revenues, which is really one of our sort of ethos now, post-demutualization, and also, as it were, to drive and develop this market architecture responsibility that we have. So Sam, I think I've spoken quite a bit, but I just thought it was important for your audience to understand really how the exchange is viewing this subject. Thank you.
Thank you very much for that. And I think it's very clear what we will be looking forward to, and holding you to account is on the positive developments as you look through many of these changes and innovations as we push forward. And perhaps now we move on to Olufemi Sojinrin of Nibs. When we look at the Nigeria ecosystem, we can almost say that there's a disproportionate focus on payments. Many of this lies in the fact that there's a belief by many entrepreneurs that payments can be more efficient, and also there's a large segment of the population that needs to be included in that ecosystem. Payments has been the forefront of the new tech economy, and I think if you look at the capital that has been raised, a big portion of that has gone into that payment system. And the liquidity there has supported the creation of jobs and many other positive things. How does Nibs support the development of the onshore tech ecosystem? And what plans does Nibs have in its position to reduce friction and enable sandboxes so new partners can easily come, test the ideas, and create value and jobs as well, and wealth within our country?
Thank you, Sam, and good morning, everyone. Good question, and I think that question actually speaks to the core objectives of Nibs. Nibs was set up in the middle 90s, I believe 1994, and we are jointly owned by the money deposit banks as well as the CBN. And our core objective was, one, to create an automated settlement system. Those who remember how the settlement system used to work back in the days know how it has really transformed over the last 2 decades working with the CBN. We've put in, so I'll just touch on some of our products that we've put in from the beginning of the foundation of Nibs up to some of the earlier products that we've released to try and facilitate and enable the payment system as well as support the fintechs. Right. So, like I was saying, Nibs was set up for 3 major reasons. One, to automate the clearing and settlement system within the Nigerian banking system. 2, to support the cashless policy that CBN have been driving, or the regulators have been driving for a couple of years now, and also to deepen financial inclusion. We know we are an odd 200 million people in Nigeria, but till today we have up till only about 160 million accounts, and you know that these are accounts that I may have 2 to 3 accounts. So unique accounts, I would say we have only about 49 million accounts within the Nigerian banking sector. So that shows, that disparity shows that there's a lot of growth opportunities within Nigeria when it comes to payment and banking. So in terms of what Nibs is doing to ensure that we facilitate and improve the efficiency, like I said, one of our legacy solutions was the automated clearing system, which built the foundation for some of the services that we're releasing today. And then we released our Nibs interbank payment service, which at the time was really novel. There were very few countries at the time that were processing and giving real-time transactions and providing real-time settlement. That service enabled growth within the Nigerian economy. It brought down the cost of processing, and it also provided instant value for our customers. More recently, we've released what we call NQR, which is the Nibs QR response payment service. And NQR basically provides an added layer of efficiency on top of the services that we provide. It also comes very, I would say, suitable in the present situation within the country or within the world when we're dealing with the coronavirus effect. And what it allows you is, without touching the terminals, you can use your phone to scan and make payments to merchants. Now, this service does not only enable interoperability between all the banks. It also allows the fintechs innovate on this product. Now, those who are very conversant with this payment mode have seen how it has been applied around the e-commerce payment space, as well as the retail payment space. So you have situations where people can do automated checkouts without physically making payments with individuals. So you can take your phones and scan the QR codes to enable payments. We also have layered a couple of other services known as the Biometric Authentication service. So the BVN service is what I would call an identify and payment service. What Nibs has done is link the BVN with your NIN, as well as your other biometric. Your NIN is your national identification number, as well as your biometric identification, like your fingerprint, as well as your facial recognition. And with that integration, it's obvious again how the fintechs can use that to innovate around payments, not just within the banking industry, but also across identification, identification around places within the Nigerian banking sector. So these platforms that we release is helping us reduce cost within the Nigerian banking space. Now, we also talked about the possibility of a sandbox experience with the introduction of open APIs, which is something taking a lot of notice within the banking sector, within and outside of Nigeria. It's obvious what kind of capabilities it brings. It allows us to innovate, it allows us to partner with all the stakeholders within the sector. This is something that Nibs is actively looking at. Within the coming month, we've already piloted our internal sandbox experience, which we would make more popular at the end of the year. When we release this should allow self-service and also, help some of the fintechs within the Nigerian banking space improve on the innovative products that they have. Besides providing an innovative platform for the fintechs and partners within the Nigerian banking space to innovate, we also provide training. And I think this is one area where very few people know that Nibs has that capacity to provide. So we provide training around regulatory compliance, around use of our products, and basically customer service and things that can help growing fintechs launch their businesses. So in a nutshell, those are the platforms that Nibs provides. They're in our common discussions. I'm sure we'll touch on a couple of other things. So I'll stop there.
Thank you for that, and that was clear. And it's good to see many of these innovations and links, because the future is simplicity, and at the end of the day, that is what technology enables. Now we move on to the SEC, Mr. Agama, and the SEC is the apex regulator and promotes capital markets whilst protecting investors. I think those two parts of the equation cannot be unbalanced. You have to promote a sustainable capital markets for it to grow and for it to add value to any society or economy. And this is much needed in Nigeria, because the experiences have shown that investors do need some level of protection. And as products evolve, there needs to be set criteria for the parties that are able to sell those products, as well as the formation of those products. There's a large non-qualified segment of the economy that looks for returns, whether it be high or modest. And I think the SEC has a strong role in pushing that. How does the SEC intend to further its role without burdening new entities looking to innovate and promote growth in the economy?
Thank you so much, Samuel, for the question, and also very happy that Renaissance Capital is running such a program to promote African investment. And of course, indeed, I say good morning to Temi and Olufemi. It's really a great opportunity to be able to speak on behalf of the SEC regarding what we are doing in this space. But, you know, what is gladdening is that, Samuel, you've already taken it off my, my lips regarding what we do, regulation and market development. There are two sides of the same coin, very important, very interwoven, and symbiotic even in nature. But clearly, you also made mention of the fact that the space where we operate with over 200 million investors or intending investors, a good number of those investors actually do not understand investment. And because they don't understand investment, a lot of people go into so many kind of stuff that they shouldn't ordinarily go into. And when they get beaten, of course, the next place to cry to will be the SEC, or the next person to weep will be the SEC. And so it is, naturally a very, very critical position that we have found ourselves in trying to bring a balance between regulation and innovation, and then protection of investors, and of course the thorny issue in the space about restriction of innovation. But I think clearly that point about restriction of innovation or inhibiting innovation is a misstatement from the uninformed. And I say that with all sense of humility, because the number of persons that have really been burnt by the actions of, innovators in quotes is so much that you will rather do what you need to do to make sure that this does not happen again by introducing regulation, even though it's construed the other way. So for us at the SEC, fintech is in our blood, fintech is in our space. We can gladly, or we can beat our chest to say, as a regulator, we are about the most innovative in this space regarding regulation of fintech and being open even to the fintech institutions. But I need also to mention that that does not just come the way it came. It is because that's actually the way the system or the financial system is wired. When you speak of financial market infrastructure and really speaking to the IOSCO principles of financial market infrastructure, you find out that what you speak to will be about 70–80% capital market and maybe 20–30% money market, payment systems. So when you speak to financial market infrastructure with all of the categories of issues in financial market infrastructure, what you have is more of capital market, less of the payment system. However, in the universe of institutions that are actually in fintech, you have so many of them in the payment system. Hence, it does appear as if the capital market is smaller than the money market or the payment system. So clearly, it gives us a very, very important role and significant role to play. And the most significant really is that of investor protection. So all we do at the SEC is try as much as possible to do that responsibility that we have been provided, to do by the ISA. Section 13 of the ISA specifically speaks to that, function that we try to execute so faithfully. But in doing that, do we stifle innovation? No, we don't. And speaking to that, I will clearly take us back history. What we have done in the last 3–4 years is when fintech started in this space, what we did was, in order to get everybody along, there was a fintech committee, a fintech roadmap committee, a market-wide committee, which brought together every stakeholder, conceivable stakeholder within the space. So come, let's think about what next. This thing is going so fast and it's running so fast. If we do not catch up with it, well, it will be hard for us to catch up with it. So we set that up, and led by a market committee member, Adebajoma was the chair of that committee, and that committee fashioned out clearly, trying to possibly diagnose the entire system in order to provide particular pillars for which growth can be achieved. Having done that, we went further to set up a blockchain and virtual financial asset committee, and the intention was clearly because in most of the fintech assignments of fintech products that we see, the base of such products is the blockchain, digital ledger technology. And so that committee was set up to say, okay, what regulation, what do we need to know and understand around this? And of course, it is extended to the virtual financial asset. Having done all of this, we set out to introduce our clarification and classification guidelines, September 2020. To say, this is what we are going to do. This is the area we are going to work on. Having done all of this, we can see the results. We've started registering companies in the fintech space. And just to add more, just recently, just this week, we issued or released the robo-advisory guidelines for robo-advisory operations in the Nigerian capital market. Not long after now, what you'll be seeing will be a regulatory incubation guideline, which we've actually socialized, and we'll definitely start operationalizing these guidelines in order for new fintechs, innovative young persons to come in and let us see exactly what they are doing and how they want to go about it. The essence is simply two things. One, risk management. Two, investor protection. And at the end of the day, I think the market will be the better for it, knowing fully well that the next frontier is actually fintech, all about capital formation and growing the capital market in a digitized format, as the NGS and other participants in the market are actually leading on us to. Thank you.
It's very pleasing to see that you're moving very quickly. We will be reviewing the robo advisory guidelines and looking forward to the additional innovations that the additional guidelines to innovation that the SEC is putting in place. I think the SEC has typically been quite open, and we are going to rely on that openness and, of course, naturally stretch it in many cases. Perhaps we move back to Nibs, and Nibs has basically developed quite a few innovative products, some of which are fully live, as were mentioned earlier by Olufemi, but others that perhaps people want to understand where they stand. So BVN for customer verification, linked to NIN, I think that's clear. With the facial capturing being put on there, I think the ability to stretch that for payments is quite intriguing. I think we also know that Nibs is looking to a Nigeria card scheme. It would be good to understand where we are on that and what is expected. There's the global standing instruction, which addresses issues around loan payments and perhaps feeds into a broader, more digital ability to provide credit to the market. It'd be good to understand that. Nibs also has Pay Africa, which is a cross-border payments platform. And this could essentially lead to more simple, cheaper ways of transferring value across the African continent and even outside of it. It would be good to understand the status of that also, as well as any other innovations perhaps that have not been highlighted in the public forum that you can disclose naturally. Thank you.
Okay, yes, thanks, Sam. So I'll start with the national card system. Okay, I'm sure we all realize that the Nigerian card system is largely dominated by three major players: MasterCard, Visa, and Verve. And even within those three, there are still investments within Verve that are international based. So it's clear that there's still a large space that we need to play in terms of local card introduction. So what Nibs plans to do is to ensure that that gap is closed, providing a national card system allows us further reduce the cost of transactions, which is one of our primary objectives. And it allows us deepen financial inclusion, like I mentioned earlier, there's still a large amount of Nigerians who do not have access to financial services. So this card allows us to further improve on the amount of people that we can pull into the financial services industry. Now, the card system is still a project that we are discussing with the CBN and some of our internal stakeholders. It's a project that we intend to launch before the end of the year. And like you know, we need to ensure that we have the relevant processes, policies, and infrastructure in place to ensure that when the card system comes out, it's something that is standard and can compete with the international cards that we have. So as much as we realize that it's important for growth within the sector, we also want to ensure that when we do this, we do it properly. We're working with, like I said, some external stakeholders without having to give out too much to make sure that this works. And when we introduce it, I guess it's clear that we can also layer a couple of services on top of that. We have the national ID card. So the card scheme can act as both a payment platform as well as an identification platform. And you can see that the innovative possibility around that is limitless to use that word. Now, I think the second initiative you asked about was the GSI, which is the Global Standing Instruction. Now, that service is in production as we speak, so it is a service that is readily available for our customers to use. Now, just a brief introduction of that service. It basically has two components or categories of the service. The Global Standing Instruction Service can be used by the banks to drive the credit quality within the institution. It takes advantage of the BVN service that we have to aggregate accounts. So it means that for a particular account holder, we actually know his account in all the banks. We know his ability to repay across the banks. So this means from a banking perspective, it's convenient for customers to ensure that, or it's convenient for the banks to ensure that there's reduced fraud, increased credit, and it improves our collection capability. Now, from a payment standpoint as well, there's a lot of value that this service can bring. Like I said, a lot of the services that we have are layered on top of each other and can be used as a combined service. So if you combine the GSI service with the BVN service, the payments, the fintech service providers can basically build products that allows you identify your customer, can allow the customer decide on which account he wants to use for payments. And based on that, we also have a centralized identification and security system that we're working on with the banks, which we will be releasing soon as well. Layer this on top of that service, it means that you can actually verify payments using any of your accounts nationwide. We also have a product called Central Pay. Central Pay is Nibs' unique payment portal. It provides the standard payment capabilities like cards, but it also provides NQR payment as well as account-based payments. So it allows you make payments by putting in your account number without having to provide any. If you have your card, if your cards are not with you, or if your phone is not with you, you basically can make payments using your account number, layered on top of the security system that we've put in place with the banks. So these are a couple of the products that Nibs has released and is releasing to ensure that we further drive down the cost. You also mentioned, I believe, PAPS, which is the Pan-African Payment Settlement System, which is, I would say, our counterparty service that's been run by Afrexim Bank. And this service is built to drive inter-trade and inter-Africa payment. We have, in terms of the status of where we are, we have started discussion again without having to provide information that's not required at this time. But we're in deep discussions with PAPS and Afrexim Bank, and I believe the global picture in terms of payments is pretty clear. We want to be able to facilitate payments across Africa. The central banks within Africa are also on board these discussions, and layering that on top of the Africa agreements that's supposed to drive intertrade within the African space, we can see how trade and commerce between the countries in Africa would grow the economy. So in a nutshell, I hope I've touched on all the questions that you've asked. You can let me know if I've missed anything out. Thank you.
I think you covered it all, and we look, as always, we look forward to seeing many of these come through. And I think the way you've said it, also around the sandboxes, means that these could be quickly deployed in a secondary derivative way to provide value for consumers across. We'll move back to the SEC, who have been doing quite a bit in terms of setting the pace on fintech regulation. The SEC has an innovation and fintech portal, has commenced regulation of digital stockbrokers, many of whom also have foreign currency operations. Also mentioned earlier was the fact that there's now rules around robo-advisory, and there's more other sectors to be covered. Many of these innovations require engagements with other regulators. How does the SEC engage other agencies to ensure there's an alignment of stance with regards to what is permissible and what is not permissible? And and this would be advice for the fintech community. How does the SEC think the fintech entities should go about regulatory engagement and advocacy?
Well, thank you. This question couldn't have come at a better time, especially because of how a lot of fintechs and indeed the populace see the SEC. One of the things I would say always, for those that have engaged with the SEC, we are very, very open. We are always available. The idea is, well, it's like, seeing your father and wanting to think that your father is a terrible person. You know it yourself, that your father certainly is not a terrible person. It's only that he has to guide you. And if he gets too playful with you, you will not understand how good his advice is or how useful it is. On Samuel, you understand that? I'm sure all of us can relate to that. So clearly we are available, always available. We've had several discussions, several engagements, and we continue to do so. And what we say is that it's better that you come and ask questions than doing what is wrong and later coming to seek for a reprieve. We are not such regulators. If you violate the rules and regulations, and indeed the Investment and Securities Act 2007, the full weight of the law will come upon you. But what is important is that before even attempting to violate it, why don't you come and ask the SEC, I want to do this, I want to do that. Is it possible for me to do it? What are the things I need to do? Are there licenses regarding this activity that I want to be involved in? And sometimes, because a lot of young people do not actually read, so to speak, beyond what they have learned, they probably do not know. The Investment and Securities Act, Chapter Section 13A of that act simply says, and very, very crisply too, that the SEC regulates the investment and securities business in Nigeria. Simple. So if you are doing an investment and securities business in Nigeria, you do not have anywhere else to go, basically, other than the SEC, because that is the law, and it empowers us to do so. And what is investment? You know, when you start thinking about returns, that you are promising returns, that there are going to be returns regarding that, and you are issuing securities in whatever form you want to issue it, as long as you fall within the PLC brackets, as we speak today, you must be under the regulation of the SEC. Having said all of this, we have continued to engage. We will continue to engage. We have the external relations, division of the SEC. Besides, people like me that have been open to everyone that has actually come to ask a question. I head the registration, exchanges, market infrastructure, and innovation division, the department. And that simply has four divisions. One of them is onboarding of new entrants into the capital market. So whatever you are, we onboard you into the market. So if you have any question, of course you can reach out to me. You can reach out to the SEC, and we'll definitely, deal with the issues that you have. Then the SEC specifically, because of the times, created the Fintech and Innovation Division. What is the essence of that? The essence is, can we speak to these people in the language that they understand? And that is what we've been doing for the last 3 years, and we're still running. And that's what brought about the idea of the regulatory incubation. And if you must know, the SEC belongs to GFIN. I'm sure you know GFIN, the Global Fintech Network. And the reason why we are part of that group is because we share the same aspirations, global aspirations about the growth of fintech, the use of fintech, the importance of fintech in the ecosystem and in the general build-up of the capital market. However, it is important to note clearly that these young fintech stars need some assistance. What kind of assistance? The assistance of putting them in the right direction. A major challenge in the fintech space is the lack of structure and governance. And for the SEC, for you to be able to collect money from people, from investors, from individuals, promising them returns, you must provide some structure. You must provide some elements of governance. It is not a fly-by-night business. The SEC, as part of its mandate, is market development. And we are the only regulator in the world, that I know that has those twin mandates of regulation and market development. And that is principally speaking to the contextual development of our client. And you made mention to that. So we are, the SEC, are open, available 24/7 to make sure that we build an ecosystem that all of us will be proud of. All of the unicorns that the Nigerian space has produced in the last 2 years has been a great pride to the Nigerian nation. But we believe and hope that where that pride will be even more justified is when we find them listing on our exchanges and, of course, growing our market. We believe and hope that is an aspiration, the fintechs are looking out for. And I'm sure the exchanges in Nigeria are fit and proper and are geared to assimilating and accommodating such institutions. We very well also know that as SEC, we will continue to support innovation, we'll continue to support fintechs, and we'll continue to support the Nigerian economy. Thank you.
Thank you very much for that. And I think we all mirror that in that we want to see a more developed market that can basically create value for all. And I'll just go very rapid fire now, and perhaps I'll address these questions to all three panelists, starting with Temi, then Olufemi, then yourself, Mr. Agama. So what aspects of the fintech or fintech developments are you most excited about, and which areas require more caution? Starting with you, Temi, then Femi, and then yourself, Mr. Agama.
Okay, thank you very much, Sam. I would say that there are a few parts. One way that I think about this is really the fact that, as they say, a rising tide lifts all boats. One of the remarkable things that the fintech ecosystem has done is to create a general awareness, I would say increased awareness, just around capital markets and just what you can really do as far as personal investing is concerned, or perhaps just looking for financial return. So that, naturally then has created, I would say, at least more attention and visibility to the subject of investments, which then ultimately has a knock-on effect to our institution. But I think more importantly, I spoke earlier about how the exchange, as we think through what I call our last mile distribution, there is no way that we can do that without two things. One is relationships. The other, of course, is technology. If you look at our historic intermediaries, they do very well on the relationships, but post-demutualization, one of the things that we'd be doing, working with these existing intermediaries, but particularly also what you call fintechs, is really how we can then address that ability to use technology to democratize finance. And so that also excites me because the fintechs are doing quite a bit of that. And I think there's a lot more that we'll be doing together with them and with other stakeholders on this subject. Away from that, then also things around blockchain. If you look at what is happening in a few exchanges, notably, you would find very quickly that blockchain also is the future. And so for us as an exchange, we're asking ourselves, if you look through all of the parts of whether it's the capital raising process, the secondary market trading process, or perhaps the settlement part of the entire ecosystem, which are in our control and which do we think is open to potential disruption or perhaps optimization. And I think if you think through just the secondary market trading, one of the things that we would be looking to pilot and look into a lot more with the regulator is really how you can apply blockchain into exchange of assets. And I think that is, I would say, the midterm future. Away from that, I think looking and thinking further out of things around artificial intelligence. Increasingly, you are seeing a lot more digitization of assets. And so whether those are traditional assets, whether those are other asset classes that are not traded traditionally, whether that's real estate, for example, or art. As an example, you're going to find a lot more tokenization and digitization of those, which is really how the future will be. And I think that finally, what I would say as far as when I think about, in this case, I think a broader subject around technology. And what excites me about that with the exchange is just the fact that the exchange has the potential ability to help spur what is clearly the next, sort of wave of growth and development in Nigeria, which is around technology. So it brings me back to really, as that ecosystem continues to grow and to develop, I think I saw a figure that we're on course for close to $1 billion worth of capital raised this year in Nigeria alone. Why is that figure 1 billion? Why isn't it 5 times that? I think that the exchange is looking to answer that question and to spur that. So I think all things put together, these are the things. Thank you.
Thank you very much. And then Olufemi.
Thanks, Samuel. I think I would say my initial or immediate excitement is around what we can use, 2 major products that we have released from Nibs. There's still a lot we can do around the QR payment. We've seen how China has used that service to totally change how payments is made within the Asian market. And a new service that Nibs is about to release called NXPay. NXPay allows payment to be done through email as well as using your mobile numbers without having to remember your account. So using email addresses, people can seamlessly make payments in a secure way. Now, if we go back to the QR code payment, it can be applied, because we have BVN. People forget that BVN is not just a number, but it can be used in any scenario where you have to identify and where you have to pay. So the use cases are limitless. From unmanned retail, we have seen services from Amazon where people go into retail shops unattended and can make payments. The QR code is a service that can be used to facilitate this within the Nigerian retail space, all the way to immigrations. In the airport, you have people showing their passports to identify themselves to enter the country. This is something that we can use biometric to solve. You have little payments going all the way to how we make payments at the toll, how we facilitate payments in transportation. So the ability to improve on the payment space within Nigeria is so huge, and it's exciting. And it would also provide an opportunity for companies to grow and for Nigeria to continue to improve on being the #1 destination for foreign direct investments. In terms of caution, I would say, of course, when there is growth in any space, there is also the ability for fraudsters to take advantage of the situation. So as we grow in enabling our payments, continue to innovate and use services like blockchain, we need to ensure that we layer that with the right security on top of it to reduce crime and to ensure that when customers use a service for the first time and there's a high possibility of fraud, then the return use of that customer becomes very low. So we want to be able to ensure that we provide confidence for first-time users. And the only way we can do that is to ensure that the fraud rates on a lot of the services that we provide is very low. And that's the only area where I say we should tread cautiously and provide the right service to support the payment industry. Thank you.
Thank you for that, Olufemi, and very interesting views. And finally, Mr. Agama.
Yeah, Samuel, for me, the entire space is available for the take with fintech. So, and that tells you the limitless nature of the opportunity that does exist. If we take our minds back to Joseph Schumpeter, the 1950 economics Nobel laureate, that spoke to the issue of creative destruction. That's exactly what fintech is. And that rolls back to the theories of Karl Marx. And in all that we are being told is creating a new tool to take over the old business. What better tool can we use to do that other than fintech? So there is no limitation as to what excites me, because if you take the entire capital market space and spectrum and you introduce fintech into it, there will be a revolution that will be creating a new paradigm that will be required and is also quite necessary for the millennial, because that is their space and that is their environment. So everything's exciting. Blockchain, digital ledger technology. There are several use cases in capital market that are yet to even come up. People are still thinking. And as we go back to destroy the old tradition in order to introduce a new paradigm, the SEC and the capital market are geared to making sure that the environment is good enough, the regulatory space is good enough for anyone that wants to do business properly within the framework of the law and innovation, to be accepted, welcomed, of course, ushered into the new euphoria. And that euphoria is about successful business within the framework of the capital market.
Thank you very much for that. And I guess on that note, we've all heard how our regulators and infrastructure partners are looking to bridge the gap between regulation and innovation. There is strong support, even though there are certain parts around investor protection that always come to bear. Thank you all for listening to this panel, and we look forward to your continued participation over the course of the day as we explore various parts of this ecosystem. Thank you once again.